Welcome back to Money Mosaic, your go-to source for smart investing insights. Today, we're answering a big question. Is Nvidia still a smart investment in 2025? In this video, we'll dive deep into Nvidia's history, business model, competitive landscape, growth drivers, financial health, risks, analyst opinions, and long-term outlook. Whether you're a seasoned investor or just curious about tech stocks, this comprehensive breakdown will give you the clarity you need. Let's get started. Nvidia Corporation was founded in 1993 by Jensen Huang, Chris Malachowski, and Curtis Preem. What began as a company focused on developing graphics processing units or GPUs quickly evolved into a tech powerhouse. Over the years, Nvidia transformed the way we experience digital graphics, initially dominating the gaming market with its powerful GPUs designed to deliver stunning visuals and smooth gameplay. But Nvidia's ambitions stretched far beyond gaming. By the mid-2010s, the company identified artificial intelligence and data centers as its next major growth frontiers. Its GPUs, known for parallel processing power, became the backbone of AI model training and complex computations, which traditional CPUs really struggle to perform efficiently. This pivot was a game changer. Nvidia's focus on AI and machine learning applications positioned it at the forefront of one of the most transformative technological revolutions in recent history. Additionally, Nvidia expanded into sectors like autonomous vehicles, professional visualization, and edge computing, diversifying its revenue streams and reducing dependency on any single market segment. The company's evolution from a gaming GPU manufacturer to an AI and data center juggernaut is a key part of its investment thesis today. In 2025, Nvidia operates through several main business segments. The gaming division remains a significant revenue contributor, accounting for roughly 40% of total sales. This segment includes high-performance GPUs targeted at gamers and esports enthusiasts. Despite challenges like market saturation and cyclical demand, gaming continues to be a steady cash generator. The data center division is arguably the fastest-growing part of Nvidia's business. Fueled by the AI boom, this segment offers GPUs and specialized AI chips used in cloud computing, server farms, and enterprise AI applications. The rise of generative AI models, natural language processing, and autonomous systems means data center demand is accelerating rapidly. Professional visualization serves industries such as design, architecture, and media production. These customers rely on Nvidia's graphics technology for rendering, simulation, and content creation. While smaller than gaming or data centers, this division benefits from high-margin sales and steady growth. Nvidia's automotive segment focuses on self-driving technology, AI cockpit systems, and related hardware. Although still early stage relative to other divisions, autonomous vehicle tech holds massive potential if Nvidia's platforms become industry standards. Finally, Nvidia has ventured into the metaverse and edge computing markets, investing in hardware and software platforms to capture emerging trends in virtual worlds and distributed AI processing. With such diverse revenue streams, Nvidia has built resilience and multiple engines for future growth, but it's essential to understand the competitive landscape Nvidia faces to gauge its ability to maintain and grow market share. Nvidia's primary competitors include AMD, Intel, and various emerging AI chipmakers. Advanced Micro Devices, or AMD, competes directly with Nvidia in the GPU market and has gained ground recently with, competitive pricing and performance. Intel, which has historically been dominant in CPUs, is now aggressively investing in discrete GPUs and AI accelerators to capture a share of Nvidia's market. Besides traditional chipmakers, there are startups focused on AI accelerators and specialized semiconductors that are really starting to emerge. Companies like Graphcore, Cerebras, and others are innovating custom AI chips that could, honestly, disrupt Nvidia's dominance. Geopolitical factors also play a role here. The ongoing US-China tech tensions, export restrictions, and supply chain complexities all pose risks to Nvidia's global operations. Manufacturing relies heavily on foundries like TSMC, so any disruption could affect production. Still, despite competition and risks, Nvidia's technological lead, ecosystem integration and customer relationships remain strong advantages. Its CUDA platform, which is a proprietary parallel computing architecture, creates a high switching cost for developers and enterprises, really reinforcing Nvidia's position. One of Nvidia's most compelling growth drivers in 2025 is, honestly, the explosion of artificial intelligence. AI models like large language models, generative AI and machine vision require massive computational power. Nvidia's GPUs are uniquely suited for this demand, thanks to their architecture that's optimized for parallel processing. The rise of generative AI tools, like ChatGPT image generators and AI-driven design, is really boosting demand for AI hardware. Cloud providers and enterprises are racing to deploy Nvidia-based infrastructure to support these applications. Data centers just keep expanding as companies migrate workloads to the cloud and adopt more AI-enabled services. Nvidia's partnerships with cloud giants like Amazon AWS, Microsoft, Azure, and Google Cloud make sure it remains the preferred supplier of AI chips. Gaming, while more mature, still provides a solid base of recurring revenue. New GPU launches, next-gen consoles, and esports popularity keep gaming demand alive. Nvidia's RTX series GPUs with ray tracing technology offer premium products for enthusiasts. Autonomous vehicles represent a longer-term growth horizon. Nvidia's Drive platform provides AI compute for self-driving cars, advanced driver assistance systems, and in-car infotainment. Emerging markets like the metaverse and edge computing, add optionality. As virtual worlds grow and devices need AI at the edge, Nvidia's investments could unlock new revenue streams. Financially, Nvidia's performance through recent years has been impressive. Revenues have grown from around $10 billion in 2018 to over $30 billion in 2024, reflecting strong top-line momentum. Gross margins consistently exceed 60%, demonstrating pricing power and operational efficiency. Earnings per share growth has been, pretty robust, with Nvidia beating analyst expectations regularly. The company maintains a healthy balance sheet with over $15 billion in cash and, honestly, manageable debt levels. This financial strength enables ongoing research and development, investment acquisitions, and share buybacks. Valuation, however, is a point of debate. Nvidia's stock trades at a premium compared to historical averages and peer multiples with price-to-earnings ratios often above 50. Risks are an important part of the investment discussion. Aside from competition and valuation concerns, supply chain disruptions due to geopolitical tensions or chip shortages remain a threat. Regulatory scrutiny on big tech companies could also impact Nvidia's business. Technological shifts are unpredictable. If alternative architectures or AI hardware gain traction, Nvidia could face challenges. Additionally, a slowdown in AI adoption or a tech market downturn would weigh on performance. So, analyst opinions on Nvidia, well, they remain broadly positive, but a bit cautious too. Most analysts are sticking with buy or overweight ratings, and that's mainly because of Nvidia's leadership in AI hardware and its pretty diversified revenue streams. But, yeah, price targets do vary quite a bit, which kind of reflects the uncertainty around growth rates and broader macro conditions. And, some analysts are warning about the stretched valuation and the potential for market volatility, so they're advising investors to really consider their risk tolerance and investment horizon carefully. Looking ahead, Nvidia's long-term outlook depends heavily on the continued adoption of AI and related technologies. If AI continues reshaping industries, Nvidia's core business should benefit greatly. The company's innovation pipeline, ecosystem strength, and expanding addressable markets are key positives. For investors, Nvidia offers a compelling growth story tied to some of the most exciting tech trends today. However, it's essential to balance enthusiasm with a clear-eyed view of risks, valuation, and competitive pressures. In conclusion, is Nvidia still a smart investment in 2025? For long-term investors confident in AI's transformative power and Nvidia's ability to lead, the stock remains an attractive opportunity. Its diversified business model, strong financials, and dominant market position support a bullish case. That said, investors should be mindful of the premium valuation and potential market volatility. Careful portfolio allocation and ongoing monitoring of Nvidia's performance and industry dynamics are recommended. If you found this video helpful, please hit like and subscribe to Money Mosaic for more investing insights every week. What are your thoughts on Nvidia? Do you believe it's still a top tech investment? Share your views in the comments below. Thanks for watching, and see you in the next video.